Let's dive deeper into the action with our market supporters. Taylor, what are you watching?
I'm taking a look at that big number that we got this morning from the PMIs, the services PMI in particular. If you come and take a look at a chart that I'm showing inside my terminal, that is the white line of the services that continues to fall into contraction territory, now down to a 47.8 reading. On the manufacturing side, things are still looking a little bit better. You're at a 52.6, but you're getting a steep fall from a reading of 56. Now, as you guys were mentioning, the equity market certainly reacted to this news this morning, but it's turning around a little bit now as we just got the closing bell. We're ending up in the green. So that seems to paint a positive picture on the equity side, except if we dig down into some of the sector level, it still looks a little bit defensive. As we know, the third quarter wrapped up with all the major defensive sectors really outperforming, and that does continue to be the theme a little bit in the first 3 trading days of the fourth quarter. You have in white here the real estate and the utilities in yellow, still up about 20% going back over a year. So you're still seeing a lot of these defensives outperform as there is and remains some skittishness out there in the market. Sarah?
Thanks, Taylor. Well, I've been keeping an eye on MTUM. That is the iShares Edge MSCI USA Momentum ETF. Well, if you look at fund flows, it's actually now seen 4 straight days of outflows, set for the worst week, actually, of the entire year. Now, you do have to take into account that much of this weekly number does come from that large spike lower you see towards the right of your screen. That came on Tuesday. That was an outflow worth more than $300 million for the largest outflow of the year, if you don't include the rebalance that you see much earlier on. So you might be tempted to say, oh, well, this goes to that rotation that we saw last month between momentum and value. People are leaving momentum. But I want to point out that if you actually look at the holdings of this ETF, it doesn't really fit into that category of momentum that others were talking about. Those saying that momentum had become utilities, real estate, staples, for example. Rather, if you look at the largest holdings of the fund, 27% is tech. Then after that, it's actually financials and healthcare. So another reminder to make sure you are digging under the hood and make sure you know what a fund actually holds beneath it. Renita?
Thanks, Sarah. I'm taking a look at the copper-gold ratio, which is at its lowest level in about a month. 1 ounce of gold can now buy about 592 pounds of copper. And copper is now headed for its 3rd straight weekly loss, while gold heads for a weekly gain. Both of these are led by global manufacturing and the growth slowdown. Now, today's gauge of U.S. services dropping to a 3-year low, and Tuesday's report of slowing U.S. manufacturing both added to expectations that the Fed will cut rates. Lower rates, of course, make non-interest bearing gold more attractive to investors. That's why this boosts gold, since investors may be seeking a safe haven for assets, and it pressures copper.